Understand? So on bank,
why is outstanding checks
because
less?
this is the bank account. Our bank account shows 5,900, right? Over analysis shows that outstanding checks are that are not presented in the bank account. It means this worth of money is not ours. We already wrote it down checks, and when the customers, when the suppliers, they present those checks, then from this balance, this will be deducted. So that's why there's a man less here.
How do we know what to deduct and what to increase? Because it's all for bank.
Yes, it's for bank. So bank statement, from bank statement, you add deposit in transit and you reduce the outstanding check. That's it.
What about bank errors? Like, how do we know? Is it always, we always increase it?
So here we go. Bank automatically corrected itself. That is the bank, normally banking errors, they automatically correct it. For example, you go to the ATM and what happened? You are received less. For example, 100 less. Next day, 100 is coming to your account. I have experienced that one. Even 6,000, I was, I put my ATM card and extracted 6,000, but what happened? 6,000 doesn't came. And next day it came to my account automatically. So bank, they automatically correct their errors. But for cash books, you need to do that. You need to make entries for that one.
No, I mean, when we have bank errors, right, logged, not logged, but like written in a sentence, how do we know when it's, to add or to subtract? Do we just infer from context?
Yes, because some errors are in your favor, some errors are not in your favor. So you need to see that. Okay?
Okay. I have a question.
Yes.
This correction of bank error, the bank deducted 100 and then put it back.
Yes.
So it's like nothing happened.
Yes, nothing happened because the bank did that, just like nothing happened. But if you did that, your cash per book balance, then you will add that, and you will show here. So this is the balance on our cash side. So you add all the receipts that electronically transferred, either dividend or either customer paid, because you don't have this knowledge. You gain this knowledge by looking at the bank statement. Okay, this customer has submitted the amount. Okay, it means our cash is increased. You adjust your bank balance. So add all the electronically transferred receipts, that's it. And all the revenues, interest revenues that bank received on your behalf. So you see the correction here? So you write it down here, the correction. But bank didn't do that. Why? Because bank correct itself. And less the service charges, because you didn't know that unless you did it in the bank service. And also the NSF check. That's it. You cancel that check. Previously, when customers submit that, you increase your cash with 50. But cash is not received, you basically nullify those entries. Cash is not received, you nullify that one. Simple. You see that the electronically payments, let me delete that one, 400. And if you tally that one, it exactly equal to the same. It means there is no chance of fraud. So this is, if you don't understand that one, even then you are in a good shape. Why? Because this is the format. So here we go. So this is the format. For example, in bank statement, you add all the deposits and less all the checks similarly, right? And then On the cash balance side, the books that you are maintaining on the cash book side, you add all the electronically receipts, whether you receive dividend electronically, or whether you receive some payments from customer, or whether you receive any interest income. You add back, and then you less service charges. And you need to be very careful about this one, whether your payment check is bounced or the customer check is bounced. So question mentioned, customer check is bounced. You see here, go back to our question. The customer, right? The NSF check from customer. And if you issued NSF check, then treatment would be opposite one. And also all the electronic payments, you less that one. That's it. Right? So these are the bank reconciliation statement. So you made changes, right? For all these changes, there must be entry, right?
What about the service charges? Would that be added or subtracted?
Of course, it would be subtracted. Bank charges, right? You paid bank charges, cash decrease. Of course, it's going to be less.
Oh, never mind. Okay, yeah.
Right? Okay, now, so from the bank side, we are not going to record it because that is a bank side purpose. Our thing as an accountant is to maintain the books of accounts. So we are going to journalize these entries. So let's talk about this. Number one, journalizing the transaction. Number one, this was our cash balance, and what happened? Add, you receive dividend. What is the entry? You receive dividend. What is the entry? Cash to dividend revenue, right? If you pay the dividend, then dividend to cash, right? You receive the dividend, cash to dividend. You collect from customers. What is the entry? Cash to account receivable, simple. All those things that you reconciled, you need to make the entries. Interest revenue, you receive interest. Cash increase, interest revenue increase. Interest revenue increase, credit, cash received, debit. Cash to interest revenue. And all the things are simple. And now what happened here? Correction. Correction of the book that you did in that one. Now you need to, you wrote it down 150. Now you need to write down more. So cash to accounts payable 360. So these entries, they changes from time to time because sometimes you record less, sometimes you record higher. So you need to use your brain to understand what's going on here. Service charges, bank service charges. What is the entry? Our cash decrease, cash credit, our expense increase. So we charges on miscellaneous expenses. That doesn't mean you can also charge it. If question says that charge it to administrative expenses, then you need to write here administrative expenses to cash. Or charge it to bank expenses, then you write it down bank expenses to cash. If the question is silent, then just write it down miscellaneous expenses to cash. That's it. Expense to cash basically. The NSF check our receipt, check receipt is bounced, right? The entry would be reversed. When we receive this check, we increase our cash, we decrease our account receivable. Now we are nullifying this effect by having account receivable to cash, simple. Annuity of payments of insurance. Insurance payment is made. What is the entry? Insurance expense to cash. Simple. Right? So these are the summaries here. Bank balance, always. On the bank side, always add deposit in transit, subtract outstanding checks, add or subtract any kind of corrections here. Do we need to make entries of this one? No, we don't have to do anything because bank will rectify itself. Right? But on book side, we need to add all the collections, revenues, and ETFs. And we need to subtract all the service charges, non-sufficient checks from customers, and the ETF payments, and then add or subtract the errors. But since we are here to handle or maintain the books, so we will make the entries, right? So when cash is increased, then cash to the relevant account. When cash is decreased, then relevant account to cash, and then make the entries accordingly, according to the errors. Everything is good? Understand? Minsu, David, Misha, Ping Ping, Sipude, Chloe.
Yeah, we got it.
Okay. If you got it, then take this picture and do that. You have 10 minutes to solve this question. Let me make the breakout room. Meanwhile, please take a picture. And here we go. David, where are you? Can you hear me?